All right, so in the first video, I kind of do a one-on-one on futures and I go over a really simple strategy on how to trade, how to get into the markets, how to not feel overwhelmed or confused about what you're looking for when you're looking at the charts. And that still stands. Now I kind of want to go over what you should look for when you're trying to determine what your bias is. I think that's probably the hardest part of trading at times is figuring out what is my bias, what am I looking for today, what direction am I going in. Making that decision makes you feel confident, but if you don't know how to make the decision, then you feel like you have no idea what you're doing, and again, makes it hard for you to stay in the chart. So let's determine our bias. In order to determine your bias, you have to click on the daily, and we're talking futures and the way things look. Now, just right off the bat, just looking at the overall market, I wouldn't pay attention to everything that's happened since over here and try to figure out that's not the case. Typically, you're focusing if you ever look at ICT or ever practice any of the tools that the program or the course teaches, you have to look in the first 20 days to sort of determine what your bias is. So that's pretty much how that goes. So if you counted 20 days back, and I like to just use this. So counting, try not to count the Sundays. So what's today? Today is technically Wednesday has opened up. So for example purposes, I'm just going to count 3, 4, 5, 6, 7, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. I'm just gonna, for good measure, from here. This is my 20-day look back. In actuality, I should probably use array here. I don't always use these. And I'll label it 20-day range. In this 20-day range, which we can highlight with the square here, right? In this 20-day range, I'm looking to see what my direction is. So technically, we made a high, a low, a higher high, and then here, if we guess based off of the body, we look like we're making a lower low. If we're going based off of the wick, we've made a lower low. So we look like we're bearish. If we're bearish and we're ready to take a trade, all we're looking for is bearish sentiment. Again, if the candles are right up here and the 20-day range stopped here and you were only looking at this, obviously you would consider yourself bullish on the daily. But the reality is, on a Wednesday at 12:51, if I'm interested in entering into London, I'm expecting bearish sentiment. So now I'm going to go down to the 1 minute. I'm scrolling down to the 1 minute, and I'm looking for an opportunity to enter into this trade. Taking back what I learned, or what I showed you guys, I gotta move this, showed you on the Futures 101 video, where you want to make sure you're labeling all your different times, right? So this was 1800 when price opened. We're going to move over and mark our 2000. We're going to also mark our midnight, because midnight is important. We're going to mark our 1 a.m. when 1 a.m. starts. Yep. And we'll prepare ourselves. Now let's say we wanted to trade in Asia, because it's not quite yet 1 a.m., so we can't really focus too much on London just yet. Let's say we wanted to trade Asia. Okay. If I'm looking for bearish sentiment based on what I saw on the daily in this highlighted 20-day range appearance, all I'm looking for price to do is for price to come above previous day highs somewhere here, do a fake out, and eventually go in the direction that I'm expecting. That's all I'm looking at. That's all I'm looking at. So when I'm looking at here from 1800, from price opening up onto Asia opening up, if I'm expecting bearish movement, then I expect Asia to rally up. And for those who were expecting buys and get liquidated and then reverse back down lower, that's all my expectation is. And that's what I'm looking for. So now if I move over to London, I'm expecting price to come up above Asia, which I showed in the previous one, that what you do is you mark your highest price and your lowest price in that section, and you wait for the time, because timing is important. You wait for price in this time period to show you what it wants to do. So let's say price continues over here, does what it does, and again I'm expecting bearish sentiment. This is price moving, by the way, not an AFib. And price goes up above this Asia highest price. I'm going to be looking over here, oh god, looking over here for price to reverse in the down. This is where I'm taking my trade. Why? Because when we looked 20 days back, the average daily range direction that we're looking into appears to be bearish. That's it. That's literally it. We're not overcomplicating it. We're not trying to make sense of it. We're not trying to decide anything else. It's just as simple. There's a lot of details that go into it, but simplicity is your best friend when it comes to trading, because it can get damn confusing. So you want to focus on simple. Simple says this yellow line, that is Asia down here, this yellow line up here, that is Asia. When I wait for my right time over here, that tells me price is ready to enter into the next session, because right here we're looking at Asia and here we're looking at London. So when I wait for London to wake up, I'm expecting price to enter into this space and at some point show me the same sentiment that Asia showed, which is come above this line and reverse back down. Does London have to do that? Absolutely not. It can literally just stay here. It can actually go down, come down even lower, and reverse back up. Fine. Do you want to take that trade? Highly not. Because you want to go based off of the sentiment that you have. If you're advanced, you know how to look for certain things. Let's say you did take a trade when it came down here, because hey, it came down here, it's going to reverse off this key level. Cool. Be very cautious about where you take your profit, because you may not be expecting your trade to go all the way up here. Because how likely is it for price to come up here, go down here, reverse, come all the way up here, and reverse back down? This is a huge movement. You have to be realistic and logical about it. So if price does tinker, go down here, expect price to come maybe up to this level, maybe, before it withers away, slows back down, maybe goes back down again, or withers away, finally goes up. Who knows? You wouldn't want to be in a trade where you enter somewhere here and you made money, then it kind of, you lose, then you kind of have a little bit of profit, then basically you're back to negative, and then finally, oh my god, it went where I wanted, but now you've lost money and time and you've been sitting in this mess for a while. So you want to be cautious, because taking a trade going in the opposite direction of your overall direction, which is supposed to be down, is not good. If your overall direction tells you, based on the 20-day look back, that you're looking at downward movement, you want your every session that you look at, you want to be looking down. Let's say New York is over here. You want to be looking downward. You don't want to look anywhere else, because why would you be confused? Now you could look up. Again, you could decide to look up, but if you do look for an upward movement, be prepared to be stopped out quickly, which means take your profits early, which means do not expect a huge volume. Expect to enter into a price somewhere down here in London and take your profit right here, or right here, or right here, which isn't much. But you see how I keep looking at something sort of low? And if I take an equilibrium, or if I take the Fibonacci and I just mark out my highs and my lows, and I mark what's halfway in between. I can't see my numbers for some odd reason. Oh, because it's white. Interesting. So here's 50%, right? Take a little line and say, look, between this particular range, I can expect price to come up to this line at some point before it reverses back down. Use this as a guiding tool for yourself. Or you can even use the Fibonacci mark, and I might be doing too much here, and just say, look, this is the lowest, this is the highest within this Asia range, lowest within this Asia range relatively, right? Because this is midnight to 1. This is not to say it's not Asia or London. This is just kind of a lull between the London. So let's say this is the in-between. Take another line. We can draw it right here. And I'm going to color that black because yellow is hard. Or red, that's fine. If that's the case, if I take a trade down here, I see price has entered into the space, and maybe it's reversed. And because I know this yellow line is a key level for the lowest part of Asia, and I want to take it upward, I'm going to be aiming for this red line, because that's going to be 50% of the move. That is a 50. 50% of the move halfway. And I can expect to take some profit here. Okay. So just keeping it simple, not focusing on too much confusion. I hope